I always like it when we can start the week off with something positive. And despite the market's lack of movement early this Tuesday for basically the first half of our session, we were still able to catch a 2-target winning trade this morning. More importantly, once again I was able to demonstrate the importance of both discipline and patience in your trading, as I didn't pull the trigger on just any setup. More so, I waited for the one that met all of my criteria, and it ended up paying off. We also got to work on our skill of analyzing structure and harmonics when we took a higher time frame view at our current trade and decided to go with a more aggressive second target than the one that we would usually use. This risk did end up paying off and allowed us to basically triple our first targets on our second targets. And as you can see, if we were any more greedy, the market would have left us behind. One thing that I found very helpful in my trading was developing a routine. So every day before heading into the live room, I start off my pre-market analysis by doing some higher time frame analysis. I always start on the 4-hour chart and then work my way down. Today, when I start off the 4-hour chart, I was looking at this bat pattern, which is something we've been watching since sometime in the middle of last week, and I noticed that the market was creating this channel. So as I went down through the hourly to the 15, I actually noticed that there was another advanced pattern within this channel as well. If we take a look at X to A, here we go, A to B, B to C, and C to D, we'll see that we actually have a smaller bullish bat pattern inside the channel of the bigger bullish bat pattern that we're trading. Now, unfortunately for me, when I brought in my Fibonacci retracements from X to A, and just bring in our 50% retracement, you'll see that price action just missed hitting the 50% retracement by 1 pip. Now, I know a lot of you traders have different rules for how you trade bats. For some, it needs to break the 382. For some, it needs to go wherever. For me personally, I need price action to hit the 50% retracement on that A to B leg, and if it doesn't do so, even if it's 1 pip away, like in this scenario, if it doesn't do so, I cannot trade this as a bat pattern. So that actually had me pretty bummed this morning, because if we look at where our bat pattern completed, and this was about an hour before the room opened, if we look where our bat pattern completed, and I'll draw in a red line down here, thicken it up some, scroll out, we'll see that our bat pattern completion comes in exactly at the same point as the area where we double bottomed off the 4-hour bat pattern. So what I did was I watched this pair and I said, hey Akil, I'm going to look for another reason to get involved. And as price action moved, I saw another opportunity to get involved in this trade by using the CTS system, or the combined technical system, combined technical score. You'll see when the market came in, used a circle instead. When the market came in to complete our initial bat pattern, you'll see that the RSI was oversold. We then retraced up, came back down to retest that structure level, and the wicks landed right on the close. And you'll see that although we had an equal level as far as price action goes, our RSI is actually trending upwards, and this is something that we call RSI divergence, which basically gives us an indicator that, hey, the market may be going higher. Now, RSI divergence isn't something that I trade by myself, but when I look at my combined technical scoring system, it's something that I can add into the equation. You know, I could add that to the RSI being oversold, to there being minor structure and major structure at the same area, to there being ratio confirmation, to even higher time frame confirmation or retest of structure. You know, there's a bunch of stuff in the checklist that I can use to basically give me a reason to get long this market. So that's exactly what we did. In the live room, put out the call to get long, hit target ones easily up in this area with no pain. So the real question came in, where do I take target twos? Now normally on an advanced pattern, scroll out some, we're looking at taking targets at one of our Fibonacci points. So in this case, first target I actually took it out a little higher than the 382 at structure. But for second targets, we're usually thinking either 618, a retest of our highs, so anywhere between these highs up here around 97.30, or maybe even this spike high right here around 97.18, or looking for advanced targets. Now usually, I don't want to say usually, but most of the time I'll stick to a pretty conservative target, meaning I'll look for maybe a retest of these structure highs up here, and I don't really like to trail trades that much. But because we had the advanced pattern happening on the higher time frame, as I go back out to the 4-hour chart, I said to myself and the traders in the room that I don't think it would be a bad idea to trail stops in hopes that we can get up to this structure level, which would be target 1 for our bigger pattern. Now I warned them before doing this that the chances are we would probably hit the top of this channel and see some type of retracement before shooting up, and because we're trailing on such a low time frame, we may get stopped out for profit, but stopped out maybe lower than what our other target twos could be. But there's also the potential that we could see a breakout of the channel, rally up, and hit target twos up around this structure level, giving us about a 200 pip second target. When trading the markets, you have to remember that you can't take it personal. Oftentimes traders become overconfident after winning trades, and even worse, timid and scared after a losing trade. Today provided a great example of why it's so important to keep pulling the trigger even after taking a loss. If you look here, I'm on a dollar Swiss 5-minute chart, and within the first hour of today's session, we took a Gartley pattern marked off here in gold. Now if I click the price action forward 1 bar at a time, you'll see that we were basically taken out within 2 candles. We had our stops at 98.04, I believe. Now what I see a lot of rookie traders do is look at this chart and say, oh man, this Gartley just broke through price action, and it didn't even play around at the level I was expecting. I'm done with this pair, let me close down the chart and forget about it. What we did in the room is, and literally about 3 bars later, if we go out to a 15-minute chart, I'm going to change the color of this to make it a little more easy to see. But if you look here in this new light green color, should have done that. Anyway, if you look here in this light green color, or in this blue, you'll see that we took a bat pattern pretty much right after we were rallied and stopped out of a Gartley pattern. Now in the past, I would have seen this, I would have been scared to enter, and basically I would have missed out on a winning trade. But because we didn't do that, we were able to make get target 1 easily hit for let's see, where do we get involved? If I bring my 886 in, somewhere up here, 19 target 1 easily hit, let's just say 20 something pips for target 1. I don't feel like calculating it right now, but we got target 1 easily hit, and we're rolling on our way down to target 2 as we speak right now. So basically our first target made up for the loss we took on the smaller pattern, and now our stops are past break even. We're actually trailing at stops, so worst case scenario we pick up a few more pips, and everything else is profit in the bank. However, if you would have hesitated, if you would have been scared and decided not to enter this trade because of the result of the previous trade, you would have lucked out, missed the opportunity, and at the end of the month your trading spreadsheet would have reflected it. Keeping to our theme of how emotions can affect one's trading, on Friday we were given a great example of why revenge trading, or I guess how revenge trading can be devastating to one's account.
We actually took a couple trades on Friday, I think about 5 of them, so big day. But I want to take a look at Euro Yen, and this was actually one of our losers. If we look in, I already have our Fibonacci extension drawn in down here at 95.77. This was the area where we were watching the market. Now originally I didn't really have a plan to buy Euro Yen, but we saw an impulse leg come down, and then the market created a nice little doji candle, as you can see. And after that, the market just started going sideways. At the same time, if you take a look at the RSI, you'll see we had some divergence on the RSI, meaning the market was going sideways. The market was oversold, and it was also creating higher highs while price action was going sideways, as mentioned before. Now we bought them up on where it's at. I let it happen for a while. I bought it up on this candle right here, 95.81. And not that I had a real strong opinion about the trade, but it just offered a good risk reward area. We had our stops down at, I think, 99.71, about 10 pips down. So stops right here. And we had targets up probably, what I say, 96.11, I think. I think we had targets up here. So as you can see, we had basically basically a 3-to-1 risk profile. Now, as I mentioned before, the market broke down, stopped us out about 2 candles later, and then came right back into our channel. And I know what at least me, the past me, would have been frustrated, saying that, oh man, the market stopped me out and now it's back up to run and hit my targets without me, and I would have entered again. I wouldn't have had an entry reason to enter again. I just would have entered again because I felt emotional and felt like the market had a personal vendetta against me, and I didn't want to miss this winner. Now, the experienced trader I am now knows that once I see a break and close below structure, I think that the market's going in that direction. So in this case, we broke and closed below. I'm thinking the market's going to continue down. And as you can see, as I click a couple times, we did come back up into that channel. But eventually, we broke to the downside again. So if I was that type of trader that said, hey, let me re-enter my entries or move my stops down, basically, I would have taken 2 losses instead of 1. I would have took, instead of 1, 10, or 11 pip loss, I would have took 2 losses, and who knows where the second loss would have been at. But basically helped preserve my account by not taking what would have been a dumb trade. And just remember, traders, that one bad trade, or not even one bad trade, one losing trade, I should say, can't make or break you as a trader. In order to be successful in this career, you need to really embrace the idea that you're going to have losing trades, and it's not important to try and win every single setup. More so, the important part is how you handle these losses and whether you continue to trade your plan after taking one, or do you decide to take revenge on the market, or do you hesitate to take the next valid setup and maybe miss a streak of winners. Last week in the room I had 4 winners and 6 losers and made profit. This week we had 6 winners and 4 losers and made profit. So understand, it's not all about winning and losing and how much you win, what your win percentage is. Obviously you need a certain win percentage to be profitable, but you probably don't need as big of one as you think. But more so, it's about how much you make on your winners and how little you lose on your losers. And if you can truly understand that concept, then all you really need to do is win 1 out of every 2 trades consistently, and you can make massive profits. So nice week. We ended the week profitable. Don't feel like bringing up my chart and calculating how much, but the goal is to become profitable each week. I'm not really concerned about day-to-day wins and losses. Really, even week-to-week wins and losses don't bother me. It's about the goal at the end of the month. But having a profitable week usually helps us get to that goal, and so we accomplished that. And as always, got to learn some pretty good lessons too. So appreciate you guys watching the video. This is the 3rd week you've been with me, I think. And thanks for taking the time to listen to me, and I'll see you next week. And for some of you guys that emailed me recently, I'll see you in the room next week. Alright, take care, traders.